Hey, what's going on, YouTube? This is your host, Aaron Yoon, coming at you from New York City. And today, obviously, I am broadcasting my daily vlog, trading vlog, a little bit later than usual because it was just a crazy day with a little bit of a scheduling conflict. I usually like to talk about this kind of stuff when the market is closed, but I honestly haven't even been able to look at my trading account since earlier this afternoon. And so I didn't know how well I was doing until just a few minutes ago. And I gotta say, what a miserable surprise. I am. Obviously, I didn't even have time to get my camera set up here, and I have to run in just a moment. But I'm committed to vlogging daily, and I just glanced over what happened before I signed on here to tell everybody about it. Not a very good day. I actually had profit going into the weekend that actually ended up getting stopped out, and that is a result of my own carelessness, as is most of my losses. That I took the trade on a contract that was way too big. I thought that I thought that there was no mini available for wheat, but there is. If you look here, there are wheat mini futures, and it's my own fault that I didn't double check because I ended up taking a trade on the standard contract. You can see that I have a couple of entries here, and I got stopped out because I was long at 533. Which, in retrospect, I shouldn't have been in it at all because of this amount of basing over here and this kind of resistance area that was going to limit my profits anyway. But I gotta say, I think I got my hopes up because I broke my own rules, I think, because I got my hopes up that like this one trade was gonna make up for all my losses. I think that's what was happening. That's why I didn't do what I normally do, which is look for a smaller, less expensive security, and I got stopped out. So this was a positive $100 profit that quickly turned into a $300 swing to the other side, and I lost $200 just on this. So that's where a huge chunk of my my losses for today are coming from. I'm debating how I'm supposed to track daily profit and losses if I'm not realizing them, if I'm not closing the books every day like I used to, like the previous months. The previous weeks, I've been out of my positions by market close every day, so it's very easy to calculate. But now I'm doing a little bit more of holding trades for longer, so it's going to be a little bit difficult to actually measure success. So I might not focus so much on the daily profit and losses because a lot of like right now I'm down. I've realized $260 plus in losses, but I'm also carrying $240 something in profit at the moment. Right now in these two trades down here, I'm gonna do a little bit better at of a job organizing and showing you guys what trades I'm holding on a day-to-day basis because I am holding things overnight, which means more than likely I am going to have open positions as I broadcast every day. So I'm going to keep those on the bottom of my watch list. You can tell what kind of positions I have because of the little symbol here. The blue circle means long and the red circle means short, and I have two positions open. I also learned a different valuable lesson over the weekend about overnight margins. Let's take a look at the British pound. So as you can see, you should already know by now if you've been following me for any period of time, I love to trade quarters. I think it does a lot of I think it's killing multiple birds with one stone kind of a strategy. It just fits my particular personality and risk palette really, really well. And so I actually set an order to go long last night at for the British pound. This is the British pound dollar future September contract at 25.25. You know, one small quarter above a big 500. 500 is a big quarter multiple, right? Multiples of 250 are big quarters, and one quarter above the big quarter is where a lot of bounces tend to happen, as you can tell right here. And so I was gonna bet on this bouncing one more time, and obviously in retrospect it was a huge move. Big fundamental support from England. I'm not going to spend too much time on the news because I'm pressed for time today, but there you could just check the headlines. Big win for the UK over the weekend, and I was aware of it and set an order. Why am I bringing this up though? Why is this an important lesson to be learned? As you can tell, I have not been filled on this. I saw an order here. I'll just put one in for now with a 25 tick stop, right? Price isn't going to come back here, so you can see I have an order placed there now. And imagine waking up this morning watching the price hit, but you didn't get filled, right? Theoretically, you would think I'd be in massive profit, right? I'd be like up $100 or something like that, but I wasn't. I never got filled. And I was really curious, and I can see that the price passed through the 25 area multiple times. So this wasn't a question of slippage, right? There's definitely plenty of volume. This is the currency market, the most liquid market there is, and I didn't get filled, and I was going bonkers because I had just my profitable trade, which was the pound, didn't get filled. And my non-profitable trade got stopped out on the wheat. So I was just absolutely livid. And I called TradeStation. You can tell that I have a TradeStation as my broker. I have that integrated into TradingView here. I called TradeStation and I was like, hey, what happened? I don't think this was a matter of slippage. I'm certain that the price hit my entry point multiple times, and they told me that upon entry, I don't have the notifications here on TradingView, but if I had the desktop app open, it would have been notifying me saying order rejected, order rejected, order rejected, because I didn't have enough margin. Margin goes up quite a bit overnight, and I don't really normally pay attention to that. Because it usually doesn't really affect me that much. But today, or rather last night, it was the first time that I missed a trade that was going to be a big winner because I didn't have enough margin. I had the right setup, you know. I had the fundamental support. I did everything right, but because I had spread out my equity across other contracts, I didn't get filled. And so you can imagine how upsetting that would be, especially since it was a big win. If it was like, oh, if you saved me from a trade because that what would have been a loss, then I guess I wouldn't be nearly as upset. But this was a massive win. And I took a big loss and as a result, didn't get filled on what would have been a big win, all because I didn't look at the wheat. I didn't look for the wheat minis, the XW instead of the ZW. I took the ZW. So this is an aspect of the futures game that I guess I'm still not fully used to. I'm more used to the Forex environment where this never really is an issue, right? I think that's why a lot of people say beginners should gravitate towards Forex, not futures, because there's more to keep track of, like margin requirements or like overnight equity and how it changes. And I really paid the price for it pretty dearly last night. So that hit a pain point that I didn't even know that I had. And as a result, I've rearranged my watch list. I'm gonna take on new habits for tracking securities, and instead of just and the other thing is I had a lot of orders spread out, like on the S&P, on the Dow, and I believe also on the euro, which actually hit. The euro actually hit, but it didn't hit until later. It didn't hit until later this morning, until after I was already stopped out of the other one, thus giving me enough room, and the margin requirements after 9 a.m. become much more friendly. So this aspect of regular trading hours and extended hour, like overnight margin requirements, it really changes the game up. Now that I'm trying to do more swing trading and bring that into the futures game, it is a little bit different, and I am going to need to be more careful. And I definitely bit the bullet hard because I didn't pay attention to that. Usually, I'm within my requirements no matter what, so I don't really do the math that much. So yeah, that's definitely painful, and it's something that I could have avoided if I was just more diligent about tracking the math. So there's a lot more going on with futures than forex. It is a little bit more advanced. It's more exciting because you get exposure to a more diverse set of securities instead of just currencies. And the swings are the volatility is for me is attractive because there's more opportunity. But there's another aspect to it that I am still this is why I say I'm still a beginner, because I miss trades as a result of this kind of thing. So if you're a futures trader, and this has happened to you, hopefully this makes you feel a little bit better. It's not exactly anything to brag about, but going forward, I'm definitely going to be taking the smaller contracts, or rather the smaller sized, like the micros and the minis, as opposed to the standards, because it's going to hurt my diversification in terms of exposure to different kinds of securities. So yeah, that's the big lesson for today. Just to recap real quick where my losses came from. I actually had a win on the crude oil, which is, where did I put crude oil? Which is here. I actually had a win here, a short from the green line down to, I gave this little wick here a lot of respect, and I took profit a little earlier, 1 quarter earlier, even though in hindsight I could have squeezed out another quarter. And I was honestly surprised by this move back up, which stopped me up, because I was going to take the same short again because of the bearish momentum. But the momentum reversed really quick. So that's how quickly this stuff can kind of turn around on you. I'm not ready to call this a trend reversal quite yet. I'm going to need to see a little bit more. I'm going to need to see it break this high, which it almost did but didn't, before I call it an uptrend and start looking for longs here. But this is definitely I don't know that I want to try and take this short again here. This is very kind of a red flag. This is very bullish momentum for a little while there during the regular trading hours. So a win here and a loss here, but still profitable if I'm only looking at oil. And then I took a couple of hits on the equities. I thought that I don't know where it is. I'm just going to go with the continuous contracts right now. I did not expect this bullish movement. I expected more sideways, or the bears to take over and push this down. I didn't quite expect this. A lot of other people that I follow were bearish the S&P and all the equities markets as well. So I felt pretty confident holding some shorts here, and then it turned around on me. This is the continuous contract, so you're not going to actually see the red and blue arrows here, but I think I took a hit on the NASDAQ as well. Yeah, 2 contracts here. I lost 2 contracts, 50 dollars each is like another. I lost another $100 here. So a couple of wins, couple of losses, but there were more losses than wins. Therefore, and the huge loss came on a standard contract. All the remaining trades kind of were a wash on the micro contracts. But yeah, lesson learned. Look for the minis, and if I don't have the minis, unless risk is very, very reasonable, I'm not going to be taking any more of these like agriculture products or some of these other currencies that don't have, like the Canadian dollar, for example, is a currency, and I like currencies, but there's no mini here. So I would need to be exposed to let's take a look at what's the tick value. See, it's like $5 a tick. So if I do a 25 pip stop, which is typical for me, it's like a small quarter stop, I'm risking $125. I am not able to take really multiple contracts here unless I want to, unless I'm going like doing extra risk, unless I'm taking on extra risk, going like kind of close to an all-in type of move here. So this isn't something that I would be able to do with my multiple contract free trade strategy. But everything else I'm in for, like the euro, for example. The euro, for example, if I'm looking here, I took 25 pip stop, which is down at the 1400 even. You can see two arrows there because I took a profit at a 1-to-1. This is what I like to call a business reason or business-minded reasoning for taking profit early. Usually taking a 1-to-1 is not a winning strategy at all, but the reason I do it is to give myself the buffer to not have to move my stop to break even for the rest of my position. Because I took a profit at this quarter, right at the 50, I took a 25 pip profit. Whatever happens to this trade, it was a free trade no matter what. So this gives me the confidence to hold and break past this. Like normally I would take a profit here as well. This is a 2-to-1, right? And maybe take a 3-to-1 here. But now I am taking on, as I said that I would, I am getting into the habit of holding trades for longer because that's where the bigger money is, to be honest. Right, and especially with currencies where they tend to trend for a little bit longer, I'm hoping to take this at least to the 500. Once it gets to the 500, I might move my stop up to either the either one quarter up here or another quarter up here, just to guarantee in some profit, and then as it breaks above the 500, I would use this big red line, this big quarter, as my new level of support. So that's the idea, and that's going to take days, maybe even weeks. Maybe not even. Maybe it'll come back down and stop me out, right? But this longer time frame, holding trades for days or weeks, is really where I want to be in the first place. The day trading strategy was more for. I'm still looking at it. It was more of a learning experience, and for me to get a lot more reps. In retrospect, speaking of day trading, the opening breakout trade for the crude would have been something that whoops, that's not crude, that is gold. Going back to crude for a moment, I was not looking at the daily breakout trades, honestly, this morning. But once, again, because I was distracted heavily today because I had other things going on. Trading wasn't at the forefront like I would want it to be on a day-to-day basis. But I will say, where am I? Okay, the opening range candle. So this is something that I gotta watch out for. The opening range candle, very reasonable movement. Like there's no movement here, like at all, right? And so very easy to take this kind of risk on. It's just 2 ticks. Like I could stack multiple contracts and stuff like that. And I know now, I know better than to take it both ways, right? I knew I wanted shorts this from this. That's why I was in short even before the opening of the day today. I was short all the way back here, as you can see, and I ended up taking profit here. But this movement, starting from this big movement right here, if I had taken the opening breakout the way that I used to do it, I would take it both ways. I would eat up more margin, I would take on more risk, and I would be placing more trades. That's the way I used to do it, but my teacher pointed out that you really should look for the overall trend first. And here there's it's a legitimate, albeit kind of weak, downtrend. So in this case, I would not be looking, in context, I would not be looking for longs off the breakout. I would ignore that, and that's something that I didn't really factor in when I was just taking the opening breakout trades blindly, taking it both ways. So that's a new added piece of trading. That's where I've upgraded my trading plan a little bit, and gonna be paying attention to opening breakouts and not ignoring them like I did for the past few days, but in context of a trend. If it's not there, if it's sideways, like last week it was all sideways, so I got kind of used to not really looking for it and just defending against it. But now this is a good example of how to trade with it. So that's about it for today. I got another a webinar that I got to jump on now, so I have to bid farewell, and I will definitely be in touch tomorrow to discuss the status update of this trade, which is kind of going against me right now. This was up definitely a lot more before, I think. But anyway, and this trade right here, which is something I'm planning on holding for a while. So that's it for today. Make sure you hit subscribe to stay up to date with daily content just like this, and stay tuned from the next video from YouTube. Thank you very much, everybody, and good night.